Welcome, everyone. We will get started in just a moment. Welcome, welcome. Thank you to everyone joining us live for today's Lunch and Learn, Community Development, Financial Institutions, and a Resilient Climate Future. And thank you to everyone who's watching the recording on YouTube. CEI is a Brunswick-based community development financial institution working to build a just, vibrant, and climate-resilient future for people and communities in Maine and for rural regions by integrating finance, business expertise, and policy solutions in ways that make the economy work more equitably. Over the last 45 years, the CEI family of organizations has invested more than $1.5 billion in more than 3,000 businesses and projects that are changing Maine's employment landscape and creating positive economic ripple effects in rural regions across the U.S. Here to tell us more are Keith Bisson, CEI's president, and Kelsie Bouchard, director of CEI Notes and Portfolio Management. We are so grateful to have you both with us today. My name is Kathleen Neal. I am the Senior Director of Policy and Partnerships here at Maine Conservation Voters and Maine Conservation Alliance. Our organizations represent more than 13,000 members and supporters dedicated to protecting Maine's environment and our democracy. MCA does that through education, collaboration, and advocacy, and MCV by influencing public policy, holding politicians accountable, and winning elections. Since 2020, this weekly online Lunch and Learn series has helped us advance all of those goals, creating a shared space to explore Maine's environmental and social history, policy priorities, climate action movement, and more. We are so glad that so many of you have joined us consistently over all of those weeks. We are delighted to have you with us again today. A few notes before we dive in. We'll hear from our speakers first and then tackle your questions in the Q&A session at the end. You don't have to wait though. You can send questions to me through the chat whenever they occur to you. I'll keep track of them, synthesize those with similar themes, and ask as many as possible following the presentation. We do ask that you not message our speakers directly. We want them to be able to focus on their presentation, not the chat box. If you have any technical difficulties today, Will Sedlak can help you out. Message him through the chat. This event is being recorded and video will be posted on our website later this afternoon. You can also find recordings of all of our previous programs on YouTube, where a number of playlists can help you focus in on particular topics. Thank you again for joining us. And Keith, I will turn it over to you to start things off.
Well, thank you so much, Kathleen and Will and the whole Maine Conservation Voters team. It's really great to be with you, and good afternoon to all the people on the call. I really want to thank you for hosting me and Kelsie, my colleague Kelsie Bouchard, and in our organization, Coastal Enterprises Incorporated, or CEI, this afternoon. It's really an honor to be with you and really fun for me because I feel like this is one of those moments when all the threads of, or many of the threads of my own life come together in terms of my interests and in the environment and natural resources, as well as in economic justice and my work here at CEI. And I also want to thank Maine Conservation Voters and your members for all the work you all do on behalf of Maine and Maine's environment, and actually, larger impact with the work that you do, even beyond Maine's borders. So again, my name is Keith Bisson. Kelsie will introduce herself in a few moments. We have some prepared remarks, and then we really want to get into some questions and back and forth. I'm really going to focus on the what of CEI and our work, and then Kelsie is going to really dig into the how, and particularly in terms of the financial side of our work, which is really, is really important to what we do. But again, my name is Keith Bisson. I'm president of CEI, and as Kathleen said in her introduction, CEI is focused on building a just, vibrant, and climate resilient future for people and communities in Maine and rural America. And we do this by integrating finance, and we're going to talk a little bit more about that, but also business expertise and policy solutions in ways that make the economy work more equitably. Our roots as an organization are in the civil rights movement and the war on poverty. So that's an important thread in our work. Our roots are also in Maine's natural resource industries in rural communities, where livelihoods are based on climate stability and environmentally healthy waters, soil, and air. And I'm proud to say that we've been focused on environmentally sustainable communities, economies, and businesses for 46 years now. Our roots were really in the fishing industry and the early development of the shellfish aquaculture industry in coastal Maine. Kathleen also referred to this term of a community development financial institution. CEI is a certified community development financial institution, or CDFI. And what are CDFIs? I won't go deeply into this, but there are about 1,400 CDFIs like us throughout the country who are typically, like us, very place-based organizations. We're private sector financial institutions that have community development as our primary mission. Another layer with that, as a certified CDFI, our work prioritizes people in communities of a low income. So we're really focused on both people and places with low incomes. Now getting into some of the topics that I know are very dear to your hearts and passions. When we look at the world, whether it's from electrification to broadband internet, new technologies are often adopted in a trickle-down fashion, where major urban centers and the well-off are the first to benefit from those innovations. Meanwhile, rural communities of color, and areas with low-income residents can be left behind for years or even decades, at great cost to their economic and often their physical well-being. At CEI, and I will note, thank you, Kelsie, for managing the slides here. Those are really just background information as we go through here, so I won't go into each of them, but just helpful background information. At CEI, we envision a radically transformed economy where clean energy is commonplace, and the impacts of climate change are addressed and mitigated through rapid decarbonization, progressive policy, and creative and flexible financing for Maine businesses and enterprises that are helping to build a more resilient future. At CEI, we work with countless communities, farmers, aquaculturists, fishers, and business owners who want to be part of a just climate transition. Now, from whether it's anaerobic digesters or compostable coffins, no joke there, we can talk about that a little bit. We seek out opportunities to work with businesses that center environmentally sustainable products and services. Our clients range from sole proprietors and small businesses committed to sustainable business practices, to farms and fisheries looking to reduce their environmental impact and build their climate resiliency, to much larger companies that are implementing new, more sustainable products and technologies. Unfortunately, many of these businesses are deterred from, and enterprises, because this can include nonprofit organizations as well, but many of them are deterred from moving forward due to a lack of time to research options and incentives, or things like tight or seasonal cash flows, particularly with natural resource businesses, that can make it difficult to shoulder the upfront costs of some of these transition opportunities. It's tempting to invest only in the large projects in population dense areas. As you can imagine, the economies of scale work in their favor. And this is precisely why more investment is needed in rural places like Maine. Impact-driven investments that provide low-cost, flexible capital and that bridge the difference that make a small or rural project more expensive than its large or urban equivalents. These also address the unfair costs borne by individuals who face systemic biases due to their location, race, gender, or other factors. And so addressing these disparities is part of our vision for a just transition. At CEI, we have the finance, business advising, and policy skills to help people and businesses achieve their carbon reduction, clean energy, and sustainable operation goals. Our work does require flexible capital to ensure that the transition is as accessible as possible to as many people as possible. And, as part of this work, we're focused on 3 themes to advance the just transition to an environmentally sustainable economy and resilient climate future. And so those I want to talk briefly about, but the first one is really focused on growing the resilience and profitability of Maine's agricultural, marine resources, forest products, and other natural resource-based businesses. So that's many of the farms, the aquaculturists, and other forest-based businesses that we're working with. Second is really focused on accelerating the development and growth of businesses and projects that focus on decarbonization specifically, and that support abundant and affordable clean energy. And lastly, we're very focused on engaging people and businesses most impacted by climate disruption and environmental degradation in the development of products, services, and policies that align with the urgency of these challenges. And I think we got connected for this lunch and learn, I think, with regard to something called the Climate Justice and Environmental Resilience Fund that CEI is developing right now. And I'll just talk briefly about that. But our goal is to raise about $34 million in lending capital with another $6 million in a sidecar pool of grant funds to support the programmatic work that goes with implementing this type of work to support a just transition. These funds, or our goal is that these funds will support a total of $60 million of investment in the just transition here in Maine. Now, on the one hand, that sounds like a lot of investment, and it is, but at the same time, when we think about the billions of dollars of investment needed to support a just transition, it's really still only a drop in the bucket, and there's much more work to do. Part of our role as a CDFI is to fill the gaps in the marketplace and what we think of as like market failures. We're not here to replace the banks. And in fact, we need Maine's local, regional, and the national banking industry to put their shoulder to this wheel because they can do things at a much larger scale than we can. And so we want to show them what's possible and what the opportunities are. So if we can make it work in Maine, and we think that we can and we have, and that includes the work that all of you have done on the policy side especially, and to change the public narrative around the urgency of these challenges that we face, we think we can also build models that are replicable across the country. We feel like we have a lot to learn, although we do also feel like we're experienced and adept at creating the types of advising programs and financial tools that are adaptable and replicable for other rural and underinvested communities and underestimated communities, as some of our peers talk about. And we often build and test programs in our local communities and then amplify our impact by exporting what we learn to our peers and partners across the country, and vice versa. And then, of course, advocating for policy change as well, because even with the amount that we invest here in Maine, if we're not thinking about policy at scale, we're not going to make the change that we need to make. Before I turn it over to Kelsie here in just a moment, I want to highlight a little bit more in terms of the what we're doing with climate justice and environmental resilience with some concrete examples that are more kind of programmatic in nature before I turn it over to Kelsie to really talk about the financial instruments and tools that we use. The first thing I just wanted to share, in the past, I guess a year and a half ago, we co-wrote the first guide for CDFIs to calculate the carbon footprint of our small business loan portfolios in alignment with something called the Partnership for Carbon Accounting Financials, which is a carbon accounting standard designed for financial institutions. If you look at greenhouse gas inventories, this would be scope 3 emissions, which are, for us, is our financed emissions. We track our operational greenhouse gas emissions, which is our offices, our heating, cooling, and things like that. But really trying to understand the impact of the loans we're making in terms of carbon emissions. We helped bring this standard over from the EU with about a dozen other financial institutions across North America. And these standards have now been adopted by something like 400 institutions in North America, many of which are community development financial institutions like ourselves, but some of them are also more traditional banking and banks, basically. We're also currently leading a cohort of other CDFIs across the country, so 6 other CDFIs in addition to ourselves, to develop something called an environmental framework to really develop metrics and benchmarks to understand, again, the opportunities and challenges faced by our borrowers, and whether it's with clean energy or waste from their businesses, and have a tool that we can then turn into an advising tool to help businesses address specific aspects of their work. So it could be reducing greenhouse gas emissions or dealing with waste and things like that. We've also used co-lending alongside local, regional, and regional New England banks in solar energy installations and solar power purchase agreements, where CEI, strangely, is actually serving as the lead lender. And we've done that because banks are still a little uncomfortable with financing these types of installations. And so we've been able to help them become more comfortable with new types of financing options. And that's changed a great deal, which is great over the past couple of years. Lastly, I wanted to talk about I wanted to highlight that it's not only about greenhouse gas emissions as we think about a just transition and resilience. So we've also co-developed something called Aquaculture and Shared Waters, which is a statewide training program that historically was designed for the commercial fishing industry, or people in the commercial fishing industry who were looking to diversify their businesses into either shellfish or sea vegetable aquaculture and learn the techniques and businesses of aquaculture. We co-designed and developed that program with a few organizations that I wanted to highlight. One is Maine Sea Grant, which is affiliated with the university, and NOAA, but also the Maine Aquaculture Association and the Maine Aquaculture Innovation Center. Over the past 10 years, we've now trained about 400 people who are, many of whom are starting and growing shellfish and sea vegetable aquaculture businesses. And if any of you eat oysters or mussels or seaweed in different forms, you've probably consumed products by some of the businesses that we've either advised or trained or financed. So just wanted to highlight that as another element of what we think of as a diverse approach to climate justice and environmental resilience. And with that, Kelsie, I'll turn it over to you to talk a little bit more about the how on the financing side of things.
Sure. Thanks, Keith. And thank you to the team at MCB for having us today. My name is Kelsie Bouchard. My title at CEI is Director of CEI Notes and Portfolio Management. It's a little bit lengthy and a little bit mysterious, but essentially what that means is that I work on both the lending side of the house, supporting underwriting and general portfolio management strategy of the organization, as well as I also wear a hat related to fundraising, managing the portfolio of investor notes that we raise and use to support much of our lending activity. CEI, as Keith has sort of touched on, is sort of a non-traditional lender, right? But we are also a very responsible steward of the capital that we raise and look to invest to our partners. Where we are sort of different than banks, credit unions, and traditional financial institutions is that at the very forefront of our activity is that we really do consider the social and environmental value of the deals that we look to finance. I think something that we contemplate regularly as we are working through our loan pipeline is we ask ourselves our question, like, what happens if we don't support this deal? What happens if CEI financing isn't made accessible to the borrower? And what are the impacts, both from a social, environmental, and other mission related perspective? What happens if we don't do this deal? One word that Keith sort of mentioned a number of times over the course of his presentation was flexible. What does that mean? What does it mean for capital to be flexible? In a traditional environment, a bank or an institution will make somebody a loan and they have to repay every month the agreed upon principal and interest payment. CEI will take a more flexible approach. So Keith mentioned some of our activity happens in natural resources based environments where cash flow is seasonal. CEI will structure a loan so that repayment is based on the timing of the cash flows within that particular sector. So if it's a lobster industry, late summer through the late fall, we'll align our loan payments with when cash is coming into the business and provide a little bit of relief when cash is not so available to the particular business, for example. But we are also sort of pushing the limits and not just thinking about flexible payment structures, right? We're thinking about revamping structures altogether so that our priorities and our mission and values are aligned with the products that we actually offer to our borrowers. Some iterations of that, we provide low cost loans. So some of our deals within the aquaculture space are priced at around 5%. We create, again, patient capital where the borrower might not have to repay the loan for even several years, while also, which sort of sounds like an equity investment, but we put it in loan clothing so that the borrower is able to retain full control and ownership of their business without with the financial support of an organization like CEI. And finally, another example of sort of that flexible capital is when repayment of the loan is just based on a percentage of sales. So a strong month or a strong quarter, we receive a higher level of repayment as opposed to a quarter where business isn't as substantial. So there are a couple of specific products and or projects that I'd sort of like to highlight that we would like to be doing more of deals of this nature going forward as we work through our climate justice and environmental resilience work. A really interesting product that we rolled out earlier this year is the concept of, we call it a solar buy down loan. And essentially what that means is we might typically price this particular deal at, let's say, 6.5 or 7%. However, the cost of the interest may be too substantial for a particular borrower. So we have used grant funds to split the interest cost, reducing the interest rate to about 3% for a borrower. And borrowers who are sort of targeted or suited for this program are essentially small businesses that want to transition away from fossil fuel type energy sources. So for example, there was a coffee roaster up the coast who wanted to install solar on the roof of their business. Doing so would have been cost prohibitive based on traditional financing standards, but they fit the requirements of this particular program. Therefore, we were able to finance purchase and installation of solar equipment that would was fit and installed on the roof of their facility. And the cost savings associated with their smaller utility bill were able to then be applied to the loan payment that they instead make to CEI. And then, as we all understand, as it relates to solar financing, once that loan is repaid, the business then benefits from reinvestment of that cash that, historically was utility bill, transitioned into loan payment. Subsequently, upon repayment of the loan, just becomes cash that becomes reinvested into the business. So that particular example is relevant because that particular business is not specifically a natural resources type business. It's a small business coffee roaster, right? However, the value and the values of that organization and their commitment to reduction in fossil fuel and reliance means that they are, subsequently able to align their values and create a sort of fit for this particular program, which is sort of neat. This particular program, we actually had over 60 inquiries in less than 6 months. And as you can imagine, it's a really broad range of businesses that were interested in spanning just about every sector that you can imagine. To date, within this particular program, we've approved 8 low-cost solar equipment deals, totaling about $530,000 in financing. So that's one particular way in which we are applying both our values and our flexible capital to Maine's business ecosystem. Keith teased a really exciting subject a little bit earlier in his presentation as it relates to eco-friendly caskets. Another example of a product that CEI has rolled out recently, and I had touched on this earlier in my points about flexible capital, but we essentially have a program called a Jumpstart Equity Program, where again, it's equity in loan clothing. So essentially CEI makes a loan to the borrower, but they are not required in this particular case and in this particular product to repay us for 5 years. And then in years 6, 7, and 8, we will look to collect the payment that is ultimately due to us. But this particular example, the company is a Black-owned, worker-owned cooperative that manufactures caskets and that are made out of wood and can fully decompose into the environment. CEI and partner financing supported equipment purchases, build out of a leased space where they were operating out of, and provided working capital. One particular way that this product is also very different from traditional financing structures is that we didn't require any collateral to be posted against the loan. Like I mentioned, no payments are due on the loan for the first 5 years of the note. So as you can imagine, providing that borrower with the flexibility and around timing of loan repayment allows them to use their cash to reinvest and ultimately, hopefully, expand the business. That is not a product that you might typically see in the traditional banking environment. And then finally, we have taken a taste of something called a royalty financing product, which is essentially where another iteration of patient capital, where repayment is only required once, in this particular case, the company achieved commercialization. So our financing went in when they were still very much in a startup phase. But this innovative and non-traditional financing was really critical to their launch. This particular company is a startup producer of a low carbon recycled glass aggregate, which essentially replaces styrofoam and other petroleum-based products used in construction, green building, and transportation infrastructure projects. So CEI financing really enabled them to get off the ground, and the capital was used to purchase both inventory, so crushed glass essentially, along with the startup equipment necessary to be able to actually produce the product. They are now poised for substantial growth, and they are already looking for more substantial and more mature sources of capital, which is a pretty neat to see the substantial sort of hockey stick trajectory of this particular company. So these three examples, right, very diverse in sort of the industries that they're operating in, but the commitment and alignment to reduction in the commitment to reduction in their carbon emissions is very evident and clear. CEI's commitment and support of their work and our willingness to assess risk in a different way, right? What would happen if we didn't do these deals, both in the short term and the long term, I think is a testament to our commitment to moving towards this sort of a more just and resilient Maine economy. I will put a pin in it there at this point, and perhaps open it up to questions, or Keith, if there's anything you think I've missed, I'm happy to invite you to follow up.
No, that was terrific, Kelsie. I'd love to get into questions. Thank you.
Thank you both. This is so interesting. And I just want to remind everybody that there will be a follow-up email that goes out later this afternoon with the recording of today's program and a couple of ways for you to continue your education on how thoughtful and strategic investments can help support a more climate resilient future. So you'll find a link to CEI's website, where you can find out all you can go way deeper on all of these exciting opportunities. You can also find a way, a link to help get in touch with some of CEI's financial advisors, and just an encouragement to think about where you invest your resources in the just transition. So how we bank, how we invest, how you consume. This is actually a great jumping off point for the first question that came in, which is about where we put our money. It's really exciting to hear about financing for good when there's so much in the news about the problematic role that financial institutions have played and continue to play in supporting the fossil fuel industries. So I'm curious about how CEI thinks about that sort of big bank fossil fuel connection, and whether you have any stances on divestment campaigns that encourage folks to pull their money out of institutions that prop up the fossil fuel industry.
Yeah, that's a great question, Kathleen. I mean, I think about it in multiple ways. I mean, one thing is that we're very lucky here in Maine to have a really strong community banking sector with many, mutual banks, which means they're basically member-owned banks, and credit unions. And so, like I'm a lifelong credit union member, for example. Those are truly locally owned institutions, cooperatives, and typically, as far as I know, most credit unions and banks in Maine are not financing fossil fuel things. So but we still need them to do more work on, to finance these sorts of things. So I definitely encourage people, if you're not banking locally, to really think about that, because it's an easy thing to do and it's supporting investment in the communities. We haven't taken a position on, national bank divestment. We have been trying to work with some of those banks, like with the Partnership for Carbon Accounting Financials. We see that as a way to get to a point where there's more of a regulatory framework for greenhouse gas emissions, because banks would have to be disclosing their financed emissions. So, name your big bank like HSBC or Goldman Sachs or whatever. If they're financing fossil fuel pipelines, that's going to be disclosed. Ultimately, I think ultimately that will happen. We're also really focused on other mechanisms such as, I would encourage you, if you're not aware of something called the Community Reinvestment Act, I would Google that, CRA, which was a law created in 1977 that really grew out of the civil rights movement and was a reaction to something called racial redlining, which is where banks would literally draw both boundaries around communities where they would not make loans because they were either communities with low incomes and or communities with majority Black populations. And meanwhile, the banks were taking deposits from those communities and investing them elsewhere. And so we, are part of discussions nationally with, are there ways to make CRA also applicable to climate impacts? Now, we want to make sure that the social justice elements of the CRA, which is really focused on low-income communities, is not lost along the way there. And so those are ways that we're trying to get engaged on that issue of engaging, local, regional, and national financial institutions.
Thanks, Keith. That's really helpful. And I appreciate that reminder to bank locally. We talk so much about shopping locally, but we can bank locally too. And that's, I have a feeling you have a lot of fellow credit union devotees in this audience. So thank you. Some of what you all shared today about CEI reminded me of the work that the climate advocates in Maine and across the country have done to establish and make sure there's funding for green banks. What's the difference between CDFIs and green banks, or is there one, or am I
okay? This is
things together that don't belong together?
Yeah, this is a great question, Kathleen. I appreciate you asking this because technically, if you look at the IRA, the Inflation Reduction Act, which was just passed, there's not really a technical definition of a green bank. Except in the law, it does say, to be eligible to participate in like the Greenhouse Gas Reduction Fund, for example, you need to be a nonprofit organization that's financing clean energy projects and it's leveraging private capital. And so arguably any CDFI that's doing that, so there's 1,400 CDFIs across the country, I would consider many of them green banks. Like I would consider CEI green bank. Now, Maine has a technical green bank that was established last year by law in Efficiency Maine, which is great. And our feeling is we want to make sure we maximize the investment of the IRA. It's the whole IRA in Maine, and I mean, obviously throughout the country, but so CDFIs are natural partners for that too. And I would, there isn't really a certifying body for green banks. There's something like 32 institutions that are green banks across the country now. So that think of like the Connecticut Green Bank, which is probably the most akin to a CDFI actually, because they've gone really deep on the type of work that Kelsie was describing that we're doing, and they're very innovative and doing really neat work. And then there's places like the New York Green Bank, there's the DC Green Bank, the Montgomery County Green Bank. There's a CDFI in Florida called the Solar Energy Loan Fund that works primarily in South Florida and Miami, and particularly in affordable housing. That's considers itself a green bank. So there's a lot, and that's not a totally clear answer, Kathleen. There's a lot of overlap, and there isn't like a technical, as there is with a CDFI, like we're certified by the US Treasury Department, and we have compliance obligations to them. There isn't a similar sort of certifying body with green banks, which is that's okay. And we have a lot to learn from the green banks because they've done a lot of work, particularly with larger scale projects and the interface with the grid, which is an area where we're have less experience with. So, and other things, and they bring new partners to the table which is exciting. So, and we're talking to them, and hopefully we'll be working with many of them going forward, particularly with the implementation of the Inflation Reduction Act.
Yeah,
Does that
which
answer
is
the question, or?
Yeah,
Yeah.
and that implementation of the Inflation Reduction Act, of course, is a huge project that is going to require all of us. I love this notion that, you know, the image you painted for me of like you talking to green banks and other CDFIs. Is there a, I don't know, professional association that you're all, you know, is there a way that you are coming together and saying, hey, this works in Maine, have you tried it in Connecticut, or you should see what we're doing in New York because it is just really exciting?
Yeah, it's not limited only to, well, let me answer that a couple ways, Kathleen. And Kelsie, please jump in too if you think I'm missing something here or want to add. We're part of a national organization called the Opportunity Finance Network, where our CEO, Betsy Beeman, is actually on the board. That's a membership organization of about 450 of the 1,200 CDFIs that meet across the country. That group just met in Chicago for something called the Small Business Finance Forum, which is really, you know, laser focused on small business financing and investment. But we meet annually, and in fact, you know, I led a plenary session at that session that included Mindy Luber who runs an organization called Series, which you may know down in Boston, that's works with a lot of, I don't know, kind of like multinational corporations on these issues. And then someone named Jahi Wise, who's currently the interim director of the Greenhouse Gas Reduction Fund at the EPA. And so, you know, in that sort of forum, we're trying to bring these issues to our broader field, because we're all at different levels in terms of our engagement on these issues, you know, because many of our peer CDFIs are very deeply focused on specific things like affordable housing or health, federally qualified health centers, which are providing healthcare in very poor communities, or childcare. You go down the list, and helping them see ways to integrate climate justice and environmental resilience into their work and into their products and services in the way that Kelsie so beautifully describes some very specific examples. So that's one big network. And then there are subsets, as I imagine, maybe with like the MCVs of the world, with like LCV perhaps is like maybe the equivalent of that. And then we are as the Greenhouse Gas Reduction Fund rolls out, where different coalitions are developing that we're part of. You know, one that may be of interest to folks is called the Community Builders of Color Coalition, which is really trying to organize, or has organized, many in our CDFI field, but also the green banks, other types of organizations that aren't even CDFIs or green banks, like the housing finance agencies, for example, because you'll all know the numbers better than me, but like 40% of emissions, I think, is from the built environment. And so housing, particularly for people with low incomes, if we can find ways to stabilize or reduce their energy costs, that's a huge plus. And so again, integrating that into the work. So there are both formal and informal networks where we're having these conversations, Kathleen.
It just makes me so happy to know that what you're learning, you're sharing out, and by the same token, learning from others around the country. That is just, it's going to take all of us to figure out this next set of challenges. You know, one of the working title when we first started talking about this program was Lending for Good, and we dropped that at some point. But is lending the primary vehicle, or is CEI also involved in grant funding? And is there, like, help us think about the difference, but we know some of the differences, but what's the difference in sort of philosophy behind those two approaches?
Yeah, let me, Kelsie, do you have any interest in taking a first stab at this, or would you like me to start? And then I do have a point of view on this, but
So I mean, I can answer the headline, right? Is
Yeah.
that our core activity is lending, without the grant piece. And then I will let Keith reflect on the sort of philosophy,
Yeah.
behind that.
So in some ways, Kathleen, you could think of a grant as like a 0% loan that you don't have to pay back. But historically, we're not a grant maker, so that's not our business, for a variety of reasons that include expertise and we don't have an endowment, for example. We earn a portion of part of our operating income is interest on loans and fees, and that's part of how we survive and support ourselves as an organization. And so we think grants are best. There aren't really resources for us to do that on a sustainable basis. I guess that's another big headline. The only caveat I would add to that is we got into grant making to some degree, and I don't see it as necessarily a permanent thing. Although the Greenhouse Gas Reduction Fund might actually create opportunities for grant funds that we would be interested in pairing with loans, because as Kelsie said, particularly with like the low interest solar product that she described, the price of capital and accessibility of resources is really key, particularly for underserved populations that we're talking about, and people in communities. We did start to do some grant making in the middle of the pandemic, but that was really like an emergency situation. So between the CARES Act and then ARPA, we deployed something like $50 million to Maine's agriculture and food business community through competitive grant processes. That was something, like I said, that was an emergency situation. In the first case, we stood up a program in 30 days to deploy $18 million in a responsible manner to hundreds of ag businesses here in Maine. And then with ARPA, we did something similar, but it was a little longer process. And then we're currently managing a grant program on behalf of the Maine Department of Health and Human Services for the Child Care Infrastructure Grant. Kelsie will laugh because she knows I'll always try to find a way to put childcare into any meeting I'm in, but we did that again because the state really needed additional capacity, and it's a priority sector for us as an organization, and it's a critical issue for the state, and it's a national issue, but something we're very passionate about. Anyway, that's a long answer, Kathleen, but I guess the other thing I would add is, like, I think targeted grants is something we're definitely interested in continuing to explore, particularly in this area of work. And as the Greenhouse Gas Reduction Fund, I don't know how familiar people are with the specifics of that, but some of those funds can be used as grants to support things like technical assistance to borrowers and nonprofits and communities. And we think, although the actual notice of funding will be released, I think, in a couple of weeks, and we'll get more clarity on this, but we think some of those funds may also be able to go directly as subsidy for like solar arrays or other greenhouse gas reduction strategies, and those sorts of things we would be interested in exploring. But and I should say, the one thing I meant to say is there's loans, and then Kelsie got into this a little bit, but we also get equity investments. So that's very patient capital, much higher risk, and we do some of that as well. So also not a grant, but different financial instrument. I hope that answers the question.
Absolutely. And thank you for all of that. I mean, when you talk about the sort of emergency response in those early days of COVID and continuing, thank you. Everybody had a lot to navigate in those days, and to know that CEI was ready to jump in with both feet and help solve some really urgent problems. You guys do good work. And
Thank you.
While you may not make a regular habit of 0% loans that don't need to be repaid, Indeed. Quite a few listeners today definitely perked up at hearing about the rate that you do borrow at, and that ability to use your access to cheaper capital for good. And of course, that's something that Maine people have been hearing quite a bit about lately, because we've gotten a few questions about the Pine Tree Power referendum question. And as we understand that proposal, one of the primary rationales is that access to cheaper capital. And so I wonder, is cheap capital the secret sauce, or is there some combination of the ability to access cheap capital with something else, and the sort of expertise that you all bring to the table, that national network? You tell me what's in the secret sauce.
Yeah, I would say it's a combination, and Kelsie, definitely jump in here too. What I would say, one thing I'd like to highlight is, not to fixate on this acronym of a CDFI, or Community Development Financial Institution, but by law, as a CDFI, we do two things. One is providing financial products and services, and again, that are specifically prioritizing very distressed people and communities in this country. The second piece, which sometimes gets a little lost in our national conversations, is the D in CDFI, which is development, and what we think of as development services. And so capital is almost always necessary, but insufficient. And, we're often working with, we have a whole array of business advisors some of whom are generalists, others of whom are working with very specific populations. For example, we run a women's business center that's statewide that prioritizes people who identify as women across the state. We also work with immigrant and refugee-owned businesses, primarily in southern Maine, just because of the way we're staffed there. And then we have some specialized expertise in ag and food and fisheries and aquaculture, who can bring very granular information to bear for those pieces. So it's both. I mean, the low cost capital is part of the secret sauce, I would say, because we borrow a lot of the capital that we're then relending to businesses, and so you can see, like, the lower that we're borrowing at, the better rates we can provide to our borrowers. And then we also are supporting these other services which are free to people and businesses. And to give you a sense, we think of things in terms of a concept of an investment team, where any loan we're doing, we're tracking like how else they're working with CEI staff. So that could be one of our women's business center advisors, or one of our workforce development staff, or one of our natural resource staff, or you go down the list. And the percentage of our loans that have some kind of investment team approach like that is typically bordering on the 80%. So 80% of any loans we're making is working with other parts of CEI. That pairing together is really critical. And then the third place, which is why entities like MCB is so important, Kathleen, is the policy piece as well. Like, that's part of the secret sauce as well, because we need to support and maintain the existing resources, but also create the new resources that are meeting the needs that we're hearing about and that communities and people are telling us about. So, Kelsie, do you want to add anything to that on the capital piece, especially?
Not necessarily on the capital piece, but I do just sort of want to spin back a little bit just to the earlier question about the network of organizations. And Keith glazed over this a little bit, but I think what's really interesting and neat about CEI is oftentimes we are pioneering products and programs that we are ultimately or eventually sharing with other CDFIs or with bank partners. So Keith mentioned early on that CEI has worked with banks and traditional financial institutions in the solar space, right? So they were a little bit reticent to start financing in that space, but CDFIs were willing to go to bat for these particular types of deals. CDFIs saw success with solar financing, and in turn, I think created comfort for the banks. Relatedly, CEI, we didn't touch upon it today, but we have a microloan program where we can essentially turn around loans up to $30,000 within 3 days to an applicant. That program was led and developed by CEI and has been replicated by other CDFIs across the country since, to great success and strong performance of those particular deals. We've done, similar sorts of things with immigrant-owned businesses and creating financial products that do not require borrowers to pay interest, because it is that concept is misaligned with their religious beliefs, for example. And we've created a product and piloted and share that program with other CDFI organizations. So what's really exciting about where we are headed in the next couple of years as it relates particularly to our climate justice work is that same sort of fact pattern, I anticipate, right? Being able to flesh out and grow some of these products that are specifically tailored to this particular type of work, and then using our network and our influence to enable others to essentially replicate those particular programs. And so I think that that's where a really neat opportunity sort of lies as it relates to CEI's influence and our space within the particular sector where we live.
Yeah, thank you, Kelsie. Great point.
That is it's just so cool. And Kelsie, I feel like you might have given us a little bit of the answer to this next question, but I can't let you guys go without asking about your backgrounds, because you clearly have these, this body of expertise and skills that I'm guessing you could do a lot of different things with. And so, Kelsie, maybe let's start with you. Like, what's your background? Why are you doing this work? Why are you doing this work in Maine? It's so cool. How did you end up here?
It's an interesting question that I'm a little scared to answer, but so I actually grew up in Fort Kent. So I grew up in northern Maine. I went away to school, and then I actually started my career on Wall Street, and I worked at Morgan Stanley, mostly in the derivatives business for like the first 8 or so years of my career. But I eventually was called to boomerang back home, and came back in 2018. I spent a couple of years actually just working for a couple of small businesses and trying to figure out exactly where I wanted to land. And CEI, sort of looking back at my education and my career, the sort of confluence of economic development is where I wanted to be. So CEI ended up being the perfect fit for both my interests and the work that I want to be doing in the ways that I want to be giving back to Maine. So that is how I ended up at CEI about 3.5 years ago.
Lucky us. I love that. Thank you so much. Keith, we've got like 1 minute.
Yeah,
Tell us about how you got here.
I'll try to be as concise as Kelsie. I mean, like Kelsie, I'm a Mainer. I was born literally a mile from where I'm sitting here talking to you. But like many Mainers, have come and gone for school and work. And really, I always had a passion for the environment, and I've always had a passion for rural places and rural Maine, and describe myself as a hopeless Mainer because I just love this place. But I quickly became interested in community economic development, and marrying that with a commitment to, at the time it was sustainable development. And I discovered CEI and found that they were doing that work, and it combined all of my interests, and I was fortunate to get here. I guess that the rest is history.
And we are all fortunate to have both of you, Keith and Kelsie, in the roles that you're in the organization that you're with, to have CEI as a part of the fabric of Maine and the work that we're all doing together. We are so grateful for that work and for you taking the time to share it with us today. Thanks to everybody for joining us. This is actually it for our June Lunch and Learns. When the July schedule hits your inboxes, you will notice that we're going to be lunching and learning on Wednesdays in July. We're hoping that will give everybody time to enjoy some long summer weekends without missing out on your favorite online programming. I'm just going to make an assumption that we're that. As always, we would love to hear from you, what you think about the schedule, what you think about programs. We cannot wait to see you on Wednesday, July 12th for Passages in American Art. You may have seen that the Portland Museum of Art has just relaunched a reinterpretation of their permanent collection with a race equity lens, and Rainey Mize, who's the assistant curator over there, is going to join us to walk us through it. Can't wait. Until then, get out there, think about your community banking and community investment, follow those links, share this program widely, and Kelsie Bouchard, Keith Bisson, thank you a million times over. Have a fabulous weekend.
Thanks so much, Kathleen. Thanks,
You're welcome.
everyone.